Hey everyone, how's it going? It's Rajin Ramdeholl, and I want to welcome you again to the Realtor Spotlight. Today is a great day because I've got a really good friend of mine, Cayce Ortale, with me, a gentleman that we've been working with for quite some time, done a ton of transactions on. I'm excited to have him on this video today, and trust me, you don't want to miss this. There's a lot of gems that he's going to share. Just talking about his track record, how he negotiates deals, and let me tell you, this guy gets them done. So Cayce, thanks for being on the Realtor Spotlight today, and looking about talking, some of the things that you're doing.
Let's do it.
All right, awesome. So tell us a little bit about yourself, again, where you transact, how long you've been in the business, let people know a little bit more about you.
Sure. So I studied real estate as an undergraduate major at NYU. More and more schools are starting to offer it as an undergraduate major. I know Wisconsin has a big real estate program. NYU also has the Graduate Shack program, which is a huge, really competitive program. So I studied real estate undergrad, and that certainly helped a lot. My first summer in New York, I got an internship at an investment sales brokerage firm. And, when I was looking to finish up school, I decided it was something I wanted to do, and I wanted to make a splash in the market, and, just kind of jumped in head first and haven't really looked back.
What do you like most about real estate that lured you into that?
I like doing deals, right? Like I enjoy meeting new people. Obviously, I enjoy working with people and working in tandem to accomplish a mutual goal, right? So whether that's you and me and we're taking on a complicated file and you're originating the loan and arranging funding with the bank, or me working with a new client whose goal is to buy a 2-family house and being there every step of the way to accomplish what we set out to do. And I really enjoy that. I enjoy the process, and I like the journey of it. I enjoy the adventure of it.
And I could definitely tell that about you, because every single time I speak to you about a client, no matter how complicated that transaction might be, or getting that client into a prospective property might be, like, you're always excited about it.
Right.
Like, you're always looking at it with the same type of mindset, which is, and I guess you're kind of like a problem solver. It seems like you like to put together puzzles and deals, because I can always kind of see how the wheels are turning when you're looking at files and you're looking at transactions. And that's why I'm saying, like, you really do seem to have a passion about this.
I definitely have a passion about it. I don't have a passion for problems. But the problems seem to just organically kind of come to us. And I'd say I'm passionate about finding our way through it, but I definitely don't seek the problems out. They kind of, whether it's an underwriting issue or a title issue, violations, whatever comes our way. And what I also like to is, I think roughly about 40% of the buyers in the market are first-time home buyers. Mm-hmm. And for a lot of them, that we've done deals with, them buying that first house is something they've set out to do and maybe had on their radar for a really long time. And the gratitude that they feel when they finally get their home, whether it's a single family, a condo, a co-op, or a multi-unit, it's really a reassuring feeling that reminds me why I enjoy doing it, And
I love what you just said there, right? Because it wasn't from the perspective of the money that I can make, the financial goals that I have. It was, you just said, like, it's dealing with people, right? And you just said it, like, for even some of our clients, and we've heard this, like, I came to the country X amount of years ago.
Right.
This was always like on the top of my list as a goal that I wanted to accomplish, because I would feel like I made it, I achieved the American dream, or whatever it is. And as you said, being able to now help those people navigate that market and get them into a home that they always wanted to get into. And you see the gratitude at the closing table or throughout that process, and after that they're inviting you to like family functions, and now you're part of the you're part of the family. That's a great feeling, right?
It is. Like our client Samru, after he closed on his 2-family, he FaceTimed me, and he was having a Corona. He was in his backyard. He was so happy, like literally just smiling from ear to ear. He was so happy, and that is a great feeling. And it's definitely part of the reason I enjoy doing it, for sure.
Absolutely. So one of the other things I really want to kind of talk about, and that's why I love this program, because I want to hear from your perspective things that you can put out there to help fellow agents, to help buyers, even loan officers be able to understand. Now, for quite some time now, we're not just talking about in this market now where more and more we're seeing sellers concessions being negotiated, right? But we're talking going back a year and a half, 2 years ago, you have been able to negotiate sellers concessions for your clients. You've been able to negotiate even price reductions for your clients. And in a market where people were like, it was unheard of, you were able to do that. So what do you think was able to separate you and make that a possibility for you to be able to help your clients achieve that maybe some of them weren't able to do?
I'd say probably two things. I'd say first, if you have a client and whether they're doing an FHA or a conventional loan, if they're dead set on having their closing costs covered and additionally maybe having a little more room to buy down their rate or whatever they want to do with the bank, they have to be the right candidate for that. So if you're working with a client and hell or high water, they want their closing costs covered in full, they have to have the right attitude about it, because not every home that you're going to look at, that's not a possibility, right? Not every submarket that you're going to look at, that's not really the market standard in a given submarket or neighborhood. But if you have the right client that is patient and genuinely understands that getting a seller's concession isn't just a gimme. It's not a giveaway.
Right.
It's something we'll have to work for and we can potentially get, but it really needs to be the right deal to make it work. That's the first thing. And if it's not a forever home, and maybe there's a deal I did with Meadowbrook last year where a client bought a 2-family. She did FHA. She did a full 6% seller's concession. And, if it's not a forever home for them, I think there's more of an openness to saying, you know what, so long as I secure the property, I take possession of the multi-unit, I'm going to have cash flow, I'm going to have rental income, I'm going to have everything I want. In a couple years, I can do a cash out refinance and then go buy my forever home. There's more of a willingness to be open and be patient to find the right deal where we can get a seller's concession. And then the second thing is, I definitely boast about our track record together.
Right.
I don't want to say I brag, right? Because we're not going into these deals bragging. That's not how we operate. But we let them know our track record is there, and we do sellers concessions. That is sort of a bread and butter we have, that when we need to do it, we find a way to make it work. Yeah. And knock on wood, we've been successful in every single one we've done so far.
So two things I definitely want to focus on that you talked about, which is you really take the time to educate your clients and understand that, hey, with your situation, two things. One, if this is what you're looking to get, this is where you're going to look to buy, right? In a sense. And the second thing that's really important is understanding that you don't have to go into this thinking that this is the last house that I'm going to get, right? It's the first step into that door, into that reality. And then the other part is also then reassuring the agents of your tracker and the lender's track record. And I think that's super important in making sure that they understand and they're comfortable with that. So once you can merge those two things together, now it makes sense why you're able to put those deals through.
Yeah, it's definitely those two things, and it has a compounding effect. When those two things go right, when you have a buyer that understands that seller concessions, a seller generally would prefer not to do that. However, we might find the right deal for you where we can get them to agree to it and let us go for it. Yeah. If the buyer has the patience, and obviously we have the track record here, having done it time and time again, and always finding a way to get it done. When those two both work, we're definitely in a good spot. You know what I mean?
Yeah. Now, one of the other things I want to talk about is in this market right now, right? I definitely want to talk a lot about this because, you know, a lot of agents are getting out of the industry.
Right.
A lot of agents are fearful because they don't know what's to come, and a lot of agents are pressing forward.
Right.
And I know we kind of spoke about this a little bit in the past, but I really want to kind of put it out there right now. You know, every time we talk to you, you're just super excited, no matter how high rates are, no matter what the news is, no matter what the headlines are, you're out there, you're working with clients, you're getting into contracts. So like for you in this market, what do you think, A, your feelings are about the market as an agent? 2, what do you think separates you as an agent in this market from other agents?
What I think about the market is, I think the Fed was coming into this late summer and fall. I think the Fed was obviously way behind on where we needed to be on rates to curb inflation. And I think the whole thing we kept hearing during COVID, after COVID, when inflation would come up, oh, it's transitory. It's transitory. Don't worry, it's transitory. And you and I have talked about this.
Yes.
I think we can all agree it's clearly not transitory.
Right. Yep.
If there's anything we know about the inflation that we're now experiencing, definitely not transitory. It's
Absolutely.
probably here to stay.
Absolutely.
So when you ask me about where we are in the current market, I think the Fed obviously had to raise rates, but the question is, are the manner in which they're doing it and how quickly they're doing it, are they doing it appropriately? And I'm not a macro economist, so I can't answer that. As an agent, I can tell you it feels like they're doing it way too fast, right? That it's 75 basis points yesterday, 75 basis points this week, 100 basis points. And it's just gone so fast that it's almost if you want to think about someone that maybe has like a drug problem or something, it's like you want to wean them off, right? You don't just go cold turkey, and that's when you're going to have withdrawals. That's when you're going to have maybe further health issues.
You're going to have tons of instability,
right?
You know.
So I think the question is the manner in which they've done it. Are they doing it too fast? As an agent, yeah, I feel like they are. And my wish would be, I'm glad they're raising rates because frankly it needs to happen. And until they raise rates, gas prices aren't going to come down, groceries aren't going to come down. So obviously rates need to be raised, but it certainly does feel like there's an element to it now that the Fed is trying to save face a little bit, right?
Yes.
And so as that pertains to the market, I traditionally have done single families and multi-units. That's what I really enjoy working on the most. But I'm doing a lot of condo and co-op deals right now.
And that's what I was going to ask you. Like, how then do you deal with some of the fears of some of your clients that are like, oh my God, I don't want to buy right now, or I shouldn't be buying right now, or what do you think? Should I buy or should I wait? How do you then transition that to your clients, right? Because you just hit a really great point, which is, they can still qualify for something that will still appreciate in value, that they can still, as we talked about earlier, it's not their forever home, but at least they're getting their foot in the door, right? So now how do you convey that over to the buyers that might be fearful and that are looking at the headlines every day and that are thinking, I shouldn't be buying right now, right? Rates being where they are is basically telling me I need to put a pause on it and not get into the market. How do you convey that over to them? What
I tell them is that New York, not just Manhattan, the boroughs, Long Island, Westchester County, are, the metropolitan area has proven throughout history to be one of the most durable, resilient, and one of the best markets if you're a long-term holder, right? Like, I sold a property in the Bronx in 2020 for $1.1 million that seller bought in 2011 for $600K, did zero work, zero capital improvements, did nothing, just hung out, relaxed, and flipped it, for almost double value 9.5 years later. So what I tell buyers right now is that we're very fortunate here in New York. Other markets aren't as fortunate as we are. They don't see the rate of appreciation we see. They don't see the number of days on market that we see, where product just moves a lot quicker. So what I tell buyers is, with higher rates right now, you're right. There are less buyers in the market, but you as a buyer, if you can let go of fear and let go of being scared, you can capitalize on that. And if you're doing a 10 or 15% down payment on a multi-unit or a single family, and I can get you a 12% price reduction, when rates drop, which inevitably they will,
yes,
you're gonna refi to a lower rate and you're gonna have double the equity for capitalizing on the market where it is.
And I want to really focus on something that you just said there, because I don't think I've ever really heard someone else talk about this, about the fact that we here locally have two things going for us, right? Number one, compared to other markets, the price stability. Even if there's a little bit of a dip, it's not like other areas in the country where you might see a 10% dip in the market here and you'll see a 30, 40% dip somewhere else. That's number one. But here's number two. When we look at globally the things that are happening, where do a lot of those people globally tend to want to put their money into?
New York. Yeah.
That's right.
Yeah.
And we don't talk about that, right? Like we have this opportunity and we don't see that benefit that we have, that we can tap into this market and have that stability that other people across the country, across the world, we're hoping that they can get into, because they understand, hey, if I want something that's stable, New York real estate is absolutely where I want to be at.
Yeah, New York, LA, and Miami, I would say, if you're a Russian oligarch or a Chinese billionaire, whatever the case may be, or just a tech professional in Europe, whatever it is, they have always viewed New York real estate, LA real estate, Miami real estate as a safe haven to park capital.
That's right. And so if they're looking at that, right, you now as a buyer, that's why I say sometimes the mindset has to be different as a buyer. And this is where you're educating them to see that, look, you are in a prime position. Don't let that headline steer you away from doing something that will benefit you, right? And that I think is super important. And I think that I would really hope a lot of the people that are looking at this video walk away understanding that this is something that you need to educate your client on and show them the value of what New York real estate is.
Right. And one thing I'd even say further to that point, one of my best friends, his business partner is Russian, right? So we have the whole chaos with Russia and Ukraine right now. They wanted to get their capital out of Russia, and my best friend's business partner has been working with them, to get their capital to the U.S. They just bought a 6-family in Astoria. Not a good deal. That it was priced way too aggressively. It wasn't, they didn't get some rock star deal on value, I guess what I'm saying. But they know that parking capital, not just in the US, but in New York specifically,
it's almost certain.
Yeah, in a submarket like Astoria, they're comfortable with that. Even if they're not getting a rock star deal, they're comfortable with that because they know their capital's safe for the next 6, 7, 8 years.
And I actually did a video about this that said that you're never buying at the height of the market. Because that's also another concern that a lot of buyers have, right? Like, I'm buying at like, this is way too much the height of the market. I want to wait. I think there's a recession, which means prices are going to drop, and then I want to jump in. And I tell them all the time, like, you bought a property back in 1988, and you were paying $100,000, let's say in Bayside, and you might have thought that's the height of the market, right? That same $100,000 that you spent back then is now $1 million and change or more in Bayside, right? So you weren't buying at the height of the market. And the same thing, if you bought it at $250,000, let's say in the mid 90s, you might have thought it was the height of the market, but again, it still wasn't. Same thing, you might have bought it at 500 or 600 in the 2000s, still not the height of the market. But the point is, every buyer, depending on where they are always having that thought. Am I buying way too high? Am I buying way too high? And I think a big problem for that was because of the collapse of 2008 in the housing market, it created this entire fear that buyers started asking themselves, that question like, what if my house drops 50%, or 80%? What happens? But if we look at that, it's one way to look at it that happened, but what happened right after that? Prices went right back up.
Yeah, they did.
And where are they now? Super higher than where they were back in 2008, 9, and 10, right? Because I remember people that were buying 2-family homes in Brooklyn for $600,000 and $700,000 back then that are now worth over $2 million.
Sure, yeah.
Right?
Sure.
So I think that's a key thing for buyers to understand, is that you have to look at long term.
Right.
You have so many options, but securing a property gives you opportunity for long-term plays.
Right.
Right?
I think I'm glad you brought up 07, 08 because we know today these loans are underwritten a lot more carefully. I mean, the hoops sometimes we have to jump through, or you guys when you're going to arrange funding on a loan, these are very carefully underwritten loans. You know what I mean?
It's not the 106% financing on an adjustable rate mortgage, right? You know, it's not those times, right?
All the paper out there right now is good paper. You know what I mean? And,
absolutely.
And so I'm glad you hit on that because you hear people coming out of the woodwork. Oh, we're gonna crash. It's 07, 08, all over, and it's just inventory in 07, 08 was like quadruple what it is right now. That's number one. Number two, not only are these more carefully underwritten loans, I don't think people realize the degree to which how carefully these are underwritten. When 07, 08, it was a free-for-all, right? So another 07, 08 isn't coming just because of how solid these loans currently are that the banks are holding.
They are.
Yeah,
exactly.
So I'm glad you brought up 07, 08. And
awesome.
Listen, if you're a long-term holder, then you're not going to want to get caught up in day-to-day, week-to-week, month-to-month pricing fluctuations, right? If you're buying a property and you have the vision, maybe long-term, to keep it as a rental property, you are buying in a supply-constrained market here in New York that traditionally, over the course of time, has proven to be one of the best, if not the, maybe,
I would agree with you.
Right, arguably the best real estate market in the whole entire universe. Yeah. So if you're a long-term holder, timing the market is an extremely difficult thing to do. But if you have the long-term outlook, you're definitely going to come out on top long-term.
Absolutely, I mean? Absolutely. Cayce, I definitely think, man, we talked a lot of great content today, a lot of great information, a lot of great stuff that I know viewers are really going to be able to take home with them and be like, wow, you know what? I'm glad that I looked at that. What I do want you to do is just take a few minutes, just, let them know, why they should be working with someone like you, a little bit again more about you, and ultimately, what would be the last thing that you want them to walk away thinking?
The last thing I would want them to walk away thinking. Well, I guess I'll backtrack. I'll go. Yeah. I'll go first. Then okay. Why someone could work with me? I'm definitely. Other agents are maybe a little more passive as far as their kind of as far as their profile, like in the brokerage market. They kind of sit back and let things sort of come to them. Where I'm gonna go out of my way. I'm gonna bend over backwards and go to the edge of the universe to get us whatever it is that we need. And I've certainly done that on files that we've done together. And I think you want someone that understands the nuances and complexities of pricing, because it's for all the great things we have in New York that you and I alluded to, of a very resilient, durable market, and arguably maybe one of the best real estate markets in the whole world. For all the good that there is with that, not that there's bad, but there's very confusing kind of nuances to it, right? Like here, you and I both live on Long Island. One property on one side of Jericho Turnpike might be worth $75,000 more than an identical property on the other side of Jericho Turnpike, right? Yes. So you need someone working for you that's really going to add value and be a resource and understands those nuances and complexities and can be there to underwrite that value with you and kind of let you in on maybe certain tricks of the trade, if you will, when it comes to pricing and value. And the same value that you add as a loan officer, you need someone that understands different loan products, someone that understands different loan products might be good for one buyer versus the next, and it's about sizing up the financing in a manner in where it's good for them long term as a borrower. The last question you asked was, I'm blanking right now.
What would be the last thing that you would want them to just walk away thinking about, or the last impression you want to leave with
Sure.
them? Because like I said, obviously, even just in doing this, you can see the vast knowledge, the passion, all that Cayce has, and the reason why you should be working with someone like this. But any final thoughts that you just want people to know? Anything else that you wanted to share?
I think I'd say if you're a buyer and you're thinking about making a splash and getting into the market, don't hold back. Even if you don't maybe buy over the next 30 days or 45 or 60 days, you want to position yourself long term to have as much value as you can in the market as a buyer. So that means studying the market, hiring a licensed real estate agent that knows left from right and has been in the market and can really sort of decipher the market with you step by step. And if you as a buyer, ultimately your goal is to achieve financial freedom, real estate is probably the best way to do that. And
I agree.
That also has been proven time and time again as maybe not the quickest, maybe not the fastest, maybe not the most explosive way to build wealth, but over the long haul. Because if you buy a 2-family and you cash out refinance and you get another single family or 2-family, you just keep building and building and building your equity. And while your equity is building, your cash flow is building, your rental income is building, and you're just taking so much stress off of your plate. So I think if there's any encouragement that I would leave to potential buyers or borrowers in the market is that don't get caught up with trying to time the market. People have been trying to time the market the last 100 years. Timing the market is almost an impossible thing to do, right?
Absolutely.
So more important than timing the market and buying at the exact perfect time where maybe you'll save yourself $10,000 on a purchase price. More important than that is what your long-term goals are. And if your long-term goals are financial freedom and being on the beach in the Caribbean, having a pina colada and relaxing, real estate, we all work for our money.
Yes.
I as a real estate agent, I work for my money. You as a loan officer work for yours. The beautiful thing about real estate is that your money works for you. And
I like that.
You could be in the Caribbean having a pina colada, and if you're disciplined and you put in the sacrifice and you've bought properties and you've grown your equity and you've refinanced and gotten more and more properties, you can be hanging out on the beach and you're churning out cash flow and it's coming straight into your account. So I think the last thing I would say is don't get caught up in trying to time the market and like a robot trying to time it the exact same time. Think about what your long-term goals are, and if that's building financial freedom through real estate, as a long-term holder, definitely just make that jump into the market, size it up, and when you find the right property, transact and buy. I think that's what I'd probably leave a buyer.
That is just awesome. I got to tell you, man, absolutely one of the best interviews I've had. So much information, so much pertinent information. And the one thing I want to just leave with everyone is, if you're out there and you're really looking for someone, like I said, and I'm hoping, obviously, you can see for yourself why you need to be working with Cayce, but I need you to just reach out to him, follow him, DM him. If you need any advice, he's there. He's willing to share it with you, his knowledge. And of course, obviously, if you're looking to buy, if you're looking to expand your portfolio, again, Cayce works all throughout the boroughs, all throughout New York State. Reach out to him. He's there to help you out. And again, Cayce, I definitely appreciate you being a part of this, us getting to highlight you and what you're doing. And like I said, definitely a pleasure. Obviously, we're going to be doing a lot of business, continue to do business in the future. And I definitely know people will be reaching out to you. So again, follow Cayce Ortale and make sure you contact him.
Cool.
All right.